Pakistan's economic landscape continues to evolve, with shifting trends in private sector lending, foreign exchange reserves, oil prices, and stock market performance. In this report, we analyze the latest business and economic developments, their implications, and future projections. Private sector lending slows, impacting economic growth. The private sector's lending has significantly slowed, raising concerns about economic stagnation. According to a 2024 UNDP report, 47% of Pakistan's population, 95 million people, live below the poverty line. The government had set a GDP growth target of 2.5% per cent 3.5% for FY25, but sluggish credit flows to trade and industry suggest challenges in achieving this. If revenue targets are missed, the government might increase indirect taxes or resort to further borrowing. Pakistan's foreign exchange reserves increase. The State Bank of Pakistan, SBP, reported a $49 million increase in foreign exchange reserves, bringing the total to $11.146 billion as of March 14. The country's overall reserves now stand at $16.015 billion, including $4.869 billion held by commercial banks. While this signals economic stability, the source of the inflow remains undisclosed. Global oil prices rise amid geopolitical tensions. Crude oil prices surged as the United States imposed new Iran-related sanctions. Brent crude futures rose 1.72% to $72 per barrel, while WTI settled at $68.26, marking a 1.64% increase. The sanctions targeted Chinese independent refineries importing Iranian oil. Additionally, U.S. crude inventories rose by 1.7 million barrels, exceeding expectations, further influencing oil prices globally. Bank Islami introduces Pakistan's first digital Islamic banking solution, AIK, Pakistan's first fully digital Islamic banking app. This innovative platform provides Sharia-compliant financial services nationwide, revolutionizing ethical banking with seamless digital solutions. KSE-100 index breaks records, surges past 118,000. Stock market continued its bullish streak, with the KSE-100 index hitting an all-time high of 119,421.81 before closing at 118,769.77. This represents a 795.0.67% daily increase, driven by aggressive mutual fund investments and anticipation of an early IMF review. Petroleum sector sees increased local production and exports. Pakistan's oil import bill saw minimal growth, but petroleum product exports surge. Higher crude oil imports enabled local refineries to increase production beyond expectations, contributing to overall economic growth. This trend indicates increased transportation and industrial activity nationwide, boosting refinery profitability. Pakistan accepts WTO Fisheries Subsidies Agreement, supporting sustainable marine resource management and protecting millions of livelihoods dependent on fisheries. With 94 countries on board, the agreement requires 17 more acceptances to become effective, ensuring a global commitment to sustainable fishing practices. While Pakistan's stock market and Forex reserves show promising growth, challenges remain in private sector lending and economic stability. The rise in oil prices and increased petroleum production highlight industrial expansion, while the launch of digital Islamic banking marks a significant fintech development. As Pakistan moves forward with global trade agreements, economic sustainability remains a key focus. Stay tuned for further updates on Pakistan's business and economic landscape. For the latest updates on Pakistan's economy, stock market trends, and business insights, subscribe and follow us on social media. This content is for informational purposes only and does not constitute financial, investment, or business advice. For the latest updates on Pakistan's economy, stock market trends, and business insights, subscribe and follow us on social media. Viewers are encouraged to conduct their own research or consult professionals before making any financial or investment decisions.